Welcome, everyone. Today we're going to unravel a topic that weighs heavily on many people's minds: late payments on your credit record. In today's video, we're going to dive deep into understanding how long these late payments stay on your credit record, the impact they have, and how you can navigate through this financial maze to improve your credit score. Let's start by setting the scene. Imagine you're planning to buy your dream house or perhaps that sleek car you've always wanted. You've been saving up, and everything seems perfect. Then you check your credit report and, lo and behold, there it is, a late payment glaring back at you. Panic sets in, and questions flood your mind. How long will this haunt me? How badly will it affect my plans? Can I do anything about it? The truth is, late payments can feel like a shadow that follows you, sometimes when you least expect it. But remember, every cloud has a silver lining, and that's exactly what we're here to explore. We'll discuss not only the challenges but also the solutions and ways to minimize the damage. So, whether you're looking to repair your credit or simply understand the process better, stick around as we break down the complexities and provide actionable insights to help you move forward. Understanding late payments. Before we dive into how long late payments stay on your credit record, it's crucial to understand what constitutes a late payment. Simply put, a late payment occurs when you fail to pay at least the minimum amount due on your credit card or loan by the due date. It may sound straightforward, but the implications of missing a payment go beyond just an overdue bill. When a payment is missed, creditors typically give you a grace period, often around 30 days, before reporting it to the credit bureaus. During this grace period, they might charge you a late fee, but it won't affect your credit score just yet. However, once those 30 days pass, creditors report the late payment to the major credit bureaus: Experian, Equifax, and TransUnion. This is when the real impact on your credit score begins. The severity of the impact depends on several factors, such as how late the payment is, your credit history, and the number of late payments you have. Generally, the later the payment, the more significant the effect on your credit score. A 30-day late payment may cause a minor drop, but a 90-day late payment could have a much more severe impact. Moreover, recent late payments have a more substantial impact than older ones, as credit scoring models tend to focus more on your recent financial behavior. Understanding these intricacies can help you navigate through the challenges of late payments and set you on a path to improving your financial health. The credit reporting process. Now that we have a basic understanding of late payments and their initial impact, let's delve into the timeline of how long these late payments stay on your credit record. To comprehend this, we need to look into the credit reporting process. When a payment is reported as late, it doesn't immediately vanish from your credit report. In fact, late payments can stay on your credit record for up to 7 years. This 7-year period begins from the date of the missed payment. So, if you missed a payment on January 1, 2022, it can remain on your credit report until January 1, 2029. That's quite a long time for a single missed payment to linger and potentially affect your creditworthiness. However, it's important to note that the impact of a late payment diminishes over time. While it can significantly affect your credit score initially, its influence lessens as time passes and you build a positive payment history. Most lenders focus on your recent credit behavior, which means that older late payments have less impact than newer ones. The role of credit scoring models, such as FICO and VantageScore, play a crucial role in determining how late payments affect your credit score. These models use complex algorithms to assess your creditworthiness based on various factors, including payment history, credit utilization, length of credit history, types of credit, and recent inquiries. Payment history is the most critical factor in both FICO and VantageScore models, accounting for approximately 35% of your overall credit score. This means that late payments can have a significant impact on your score. However, the severity of the impact depends on the specific scoring model used and your overall credit profile. For instance, FICO scores are more forgiving of isolated late payments if you have a strong credit history. On the other hand, VantageScore tends to be more sensitive to late payments, especially if you have a limited credit history. Understanding these nuances can help you better anticipate how late payments will affect your credit score and take appropriate measures to mitigate the damage. The impact of multiple late payments. While a single late payment can be damaging, multiple late payments can compound the negative effects on your credit score. When lenders see a pattern of late payments, they may view you as a higher-risk borrower, which can lead to higher interest rates, lower credit limits, or even loan denials. Additionally, having multiple late payments can extend the 7-year period during which they remain on your credit record. Each missed payment is reported separately, which means that if you have a series of late payments over several months, they can continue to affect your credit score for an extended period. It's essential to address any late payments as soon as possible to prevent further damage to your credit score. By taking proactive steps to rectify the situation, you can start rebuilding your credit and improving your financial standing. The emotional toll of late payments. Financial stress and anxiety. Beyond the practical implications of late payments, there's an emotional aspect that often goes unaddressed. Dealing with financial challenges can be incredibly stressful and anxiety-inducing. The weight of a poor credit score, coupled with the fear of financial instability, can take a toll on your mental and emotional well-being. Late payments can lead to feelings of shame, guilt, and frustration. You may worry about how it will affect your future financial opportunities, such as securing a mortgage or car loan. The uncertainty of not knowing how to fix the situation can exacerbate these feelings, leaving you overwhelmed and unsure of where to turn. It's important to recognize that financial difficulties are a common experience, and you're not alone in facing them. Acknowledging the emotional impact of late payments is the first step towards addressing them and finding a path forward. Rebuilding confidence. Rebuilding your credit and financial confidence is possible, but it requires patience and perseverance. Start by taking small steps to regain control of your finances. Create a budget to track your income and expenses, prioritize your debts, and develop a plan to pay them off over time. Focus on building positive financial habits, such as making on-time payments, reducing debt, and avoiding unnecessary expenses. Celebrate small victories along the way, and remind yourself that progress is a journey, not a destination. Remember, your credit score is just one aspect of your financial life. While it's essential to address late payments and improve your credit, it's equally important to cultivate a healthy mindset and develop resilience in the face of challenges. Strategies for overcoming late payments. Communicating with creditors. One of the most effective ways to address late payments is to communicate with your creditors. If you anticipate difficulty making a payment, reach out to them as soon as possible. Many creditors offer hardship programs or payment plans to help you manage your debts during challenging times. Explain your situation honestly and explore potential solutions together. Some creditors may be willing to waive late fees, extend payment deadlines, or temporarily reduce your interest rate. By being proactive and transparent, you can demonstrate your commitment to resolving the issue and maintaining a positive relationship with your creditors. Negotiating payment arrangements. If you've already missed a payment, consider negotiating a payment arrangement with your creditor. This could involve setting up a structured repayment plan, making partial payments, or requesting a temporary reduction in your monthly payment amount. When negotiating, be clear about what you can afford and work collaboratively to find a solution that meets both your needs and the creditor's requirements. Document any agreements in writing and follow through with your commitments to rebuild trust and credibility. Credit repair and dispute resolution. In some cases, late payments may appear on your credit report due to errors or inaccuracies. Regularly review your credit reports from the major credit bureaus and dispute any incorrect information you find. You have the right to request corrections or removals of inaccurate data, which can help improve your credit score. Consider seeking assistance from credit counseling or credit repair services if you're overwhelmed by the process. These professionals can provide guidance, negotiate with creditors on your behalf, and develop a personalized plan to address your credit challenges. Practical tips for preventing late payments. Setting up automatic payments. One of the simplest ways to prevent late payments is to set up automatic payments for your bills and loans. Most banks and credit card companies offer this service, allowing you to schedule payments to be deducted automatically from your bank account. Automatic payments ensure that your bills are paid on time, reducing the risk of late fees and negative impacts on your credit score. Be sure to monitor your account regularly to ensure you have sufficient funds to cover these payments and avoid overdraft fees. Creating a budget and payment schedule. Establishing a budget and payment schedule can help you stay organized and prioritize your financial obligations. Start by listing all your monthly expenses, including rent or mortgage, utilities, groceries, transportation, and debt payments. Compare your total expenses to your income to determine how much you can allocate to each category. Create a payment schedule that outlines when each bill is due and set reminders to ensure you pay them on time. Use digital tools, such as budgeting apps or calendar alerts, to help you stay on track and avoid missing payments. Building an emergency fund. An emergency fund acts as a financial safety net, providing you with a cushion to cover unexpected expenses or income disruptions. Having an emergency fund can prevent you from falling behind on payments during challenging times and reduce the risk of late fees or damage to your credit score. Aim to save at least 3 to 6 months' worth of living expenses in your emergency fund. Start small by setting aside a portion of each paycheck, and gradually increase your contributions over time. The peace of mind that comes with having an emergency fund can alleviate financial stress and provide a sense of security. The road to credit recovery. Rebuilding your credit score. Rebuilding your credit score after experiencing late payments is a gradual process, but it's achievable with dedication and perseverance. Start by focusing on making all future payments on time, as a consistent payment history is one of the most effective ways to improve your credit score. Reduce your credit utilization by paying down outstanding balances and keeping your credit card balances low. Avoid applying for new credit accounts unless absolutely necessary, as too many inquiries can negatively impact your score. Tracking your progress. Regularly monitor your credit reports and track your progress as you work towards improving your credit score. Reviewing your credit reports allows you to identify any inaccuracies or areas for improvement, and it helps you stay informed about your financial health. Take advantage of free credit monitoring services or apps that provide real-time updates on your credit score and credit report changes. Celebrate small victories along the way and stay motivated by focusing on your long-term financial goals. Seeking professional guidance. If you're struggling to rebuild your credit on your own, consider seeking guidance from financial advisors or credit counseling services. These professionals can provide personalized advice and support to help you navigate the complexities of credit repair and develop a comprehensive plan to achieve your financial goals. Credit counseling agencies can also assist with budgeting, debt management, and negotiating with creditors. By seeking professional assistance, you can gain valuable insights and resources to help you overcome financial challenges and build a stronger financial future. Conclusion. In conclusion, late payments can have a significant impact on your credit score and financial well-being, but they don't have to define your financial future. By understanding how late payments affect your credit record and taking proactive steps to address them, you can regain control of your finances and work towards improving your credit score. Remember, financial challenges are a common experience, and it's essential to approach them with resilience and determination. By implementing practical strategies to prevent late payments, rebuild your credit, and manage your finances effectively, you can achieve greater financial stability and peace of mind. Thank you for joining me on this journey to explore the complexities of late payments and credit recovery. I hope you found this video informative and empowering. If you have any questions or experiences to share, please feel free to leave them in the comments below. Don't forget to like and subscribe for more insightful content on financial health and well-being. Until next time, take care and stay financially savvy.